in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn is with Hackett Financial in Boca Raton, Florida, and this edition of the Moving Iron Podcast is brought to you by Dawson Tire & Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom, delivering insights, and Dryshod Boots, the official work boot of the Moving Iron Podcast. Well, Shawn, we had some action yesterday that really hit some highs, all-time highs, well, not all-time highs, but some in not so short memory highs in soybeans. We started looking at, we banged on the $12 bean sector. They rolled back a little bit to about 11.91 or 92 or something like that. That's what they closed at. You know, corn is still hovering around that 425 to 430 range, depending on what contract you're looking at. And cattle and hogs all had a good day. So I guess as you take a look at what's going on in the market, there seems to be the weather market in Brazil and what we see happen here in the U.S., even with the La Nina stuff, is really starting to lend some credence to what you've been talking about here over the last couple of years.
We're certainly, seeing that begin to develop, and as you know, Casey, we think this kind of a overall drier weather pattern is going to be with us all the way into next summer. So this is just going to be an ongoing theme. I would have to say, though, that, overnight we've seen some big reversals.
Yeah, definitely.
And we talked about this last week, that right now there's enough what I call timely rain, like nothing that's changing the drought, nothing that's making it, but enough timely rains that I don't see a clear present danger, and we don't really ever get to clear present danger until mid-December. And I think what's happened here, Casey, has been a lot of panic in the market. There's been a lot of stockpiling by the Chinese, stockpiling by other people, overbuying, and I just think that as we move in, to this period where it doesn't look like we're going to have, Chinese demand is actually starting to ebb a little bit. And so I think it's a period, $12 soybeans is a really, really tough resistance area from like 3 or 4 years ago. We're going to need to get into what I'd call irreversible damage to South American soybean crop before we can break through that. And we tested it yesterday. The market almost wanted to print 12. You almost could feel it. It wanted to print 12. It did, and now we're reversing violently. So I think we're in a period of correction. I think we're going to probably, corn got into that. If you look at the March contract, in that upper 430s, almost, that 450s, a huge resistance area. So I think we can correct here into the first half of December. And then I do think fireworks can start up again. But I would think, this would be a period that the market probably sets back buyers, say, we bought enough for now. Let's just wait and see if we get into mid-December and we're really in trouble or not. So, I would say that, once again, if you're a farmer and you've been holding out a little bit or, trying to see how far it's going to go, I get some cash grain sold, especially on those bushels that you can't sell, can't store. Just make sure you're tight up and make sure you got it done because, these price levels, as you said, we haven't seen a lot of these price levels over the last 8 years and just want to make sure you get enough done that you can keep your business funded right now. But there'll be a good opportunity to buy. We think, in the first half of December, we're really looking for our livestock producers to gain coverage when this correction looks like it might be completing here, maybe by mid-December. So that's what's in our head right now in terms of the grain markets.
Yep. So when you think about what's going on with sugar right now, something we don't talk about very much, but it's definitely something I want to talk about just because of where we're at in my neck of the woods here with sugar beet harvest the way it is. So this time last year, I don't think about a third of the sugar beet crop actually got harvested, and there was just an epic amount of just crop failure to freeze across the entire sugar beet I don't know, belt, I guess. Everywhere that grew sugar beets had an incredible issue doing that. We had to, and then on top of that, the world sugar supply with all the stuff that was going on with the desert locust and either drought or, and then on top of that, even in some places, too much water. We had a world supply of sugar that was shrinking, and now we start looking at that sugar market and starting to make some moves. What's your thoughts on sugar, and where do you see it headed?
Well, I mean, prices have rallied about 55% off of the panic virus lows. And as you said, it was a result of last year's poor crops, some increased, obviously, demand that came in. But remember that because energy prices have been so low, that Brazil's been converting far more sugarcane over to refined sugar than ethanol. And in fact, their actual sugar production is up a lot from last year. India actually had a very good crop because a La Nina tends to mean good moisture for India, and sugar lucked out that the desert locust kind of missed some of the key areas there. But the Indians have been playing games with their export tariffs, and so a lot of sugar that should be entering the market, it's been held back because of all this uncertainty. But it does look like India is going to get that cleared up, so there could be quite a surge of Indian exports onto the market here over the next 30 days. So we're thinking sugars probably could come under some pressure for those two, for that reason alone, because there's a lot of sugar that they have to sell. I mean, Indian farmers have to sell it to survive. So I would say for now, this 16-cent resistance is like the $4.50 corn, like the $12 soybeans. It's going to be awfully, awfully hard to get through 16 without getting clear and present danger in South American weather, which, remember, in Sao Paulo, where they grow almost all the sugar for Brazil, very, very dry, but they're getting some timely rains that's taking a little bit of the pressure off of that concern. So I still think sugar is kind of probably in the same kind of a pattern as the grains, topping out, reversed lower. We could set back here a little bit before we dig our heels in, and then we have another surge, because I do believe Brazil weather and South American weather overall is going to reach we're going to have a weather market, like a legitimate weather market, but we're not quite there yet, and sugar is going to be caught in this yin yang, just like the grain markets. Remember, if crude oil can break out, above this 43, 44 area that's trying to break out now, and we get into the 50s, then you start getting they're going to start moving some more sugarcane over to ethanol, and then the sugar production comes down just as they're having a poor crop next year. So you could see how we could get into a real supply problem in Brazil as we move into 2021. So there's reasons to believe there's higher prices later, but I just think for now, probably going to have an oversupply for a little while from that Indian situation. So,
okay, so now that was my next topic that you brought up here was oil. West Texas oil has been bouncing around 42 to 43 range. Can't seem to really get much going on the other side of that. It seems like everything else is kind of rallying around this vaccine news. We see quite a bit of vaccine news that comes up. Yesterday, a lot of the markets were really contributing the fact that these COVID-19 vaccines are getting closer and closer to really being something that's going to come true. Now we've got 3 different companies out there that have put a vaccine up. Now that we're looking at what we see happen in the livestock market, the crude market's doing the same way. Is kind of starting to see some rallies there of a little kind of a bit, but they just can't get past that 44 mark. So, what are your thoughts with this different COVID vaccines that are out there, and how that's going to relate to oil, and is that going to open up the marketplace up a little bit to have more folks out driving around and traveling, and think with more confidence as this COVID vaccine starts to hit the marketplace?
Well, I think buyers are saying, we've been kind of buying gingerly here because we weren't sure what was going to happen. But let's just say if we think from springtime onward we're going to be vaccinating everybody, or everybody who wants to be vaccinated, or the highest risk part of the population, and the economy's going to get wide open, and we're going to go back to driving around, flying around, going to movies and theaters and all those kind of things. And then everybody, I think buyers want to say, maybe we should get some extra coverage here. Maybe we should just hedge our bets a little bit. Maybe while things are still not too expensive, we need to get some more bought. And that's kind of put a push into things like livestock and the crude oil market, kind of on the upper end of the trading range here. The cotton market have a little bit of a surge, but so that kind of preemptive buying is coming in. But remember, the demand is not going to be there today, or next week, or next month. I mean, the best case scenario is that by spring, people will start feeling like they can go out again. I know some people are going out now and they don't care, but I'm saying for all the country as a whole, it looks to me like spring could be where everyone gets comfortable going out again. And so, how much preemptive buying can you put into the current market? And what if there's a disappointment? What if there's a delay in getting it out, or there's some side effects that come out when these results actually come out in its entirety? It's still a lot of uncertainty around that, Casey. So I'd be a little cautious that some of this buying is a little too preemptive, in my opinion. But at the same time, so long as those vaccines are out there, it does give people light in the tunnel that this period of low demand is going to get better. And in the case for crude oil, U.S. production is falling. And so whenever we get demand going again, I mean, that could really be a wild cannon. You could put 50% on that market very, very quickly if we actually get our economy going again and get back to normal demand for gasoline. You could see a $40 market go to $60 pretty fast. And then everything changes because ethanol's back, corn demand for ethanol's back, sugar demand for ethanol's back. All of a sudden the whole game changes and everything, petroleum-based fiber that competes for cotton, becomes too expensive. Everything, all the dynamics start to change. That's we haven't had that environment with crude oil being hot, in that 60 range for a long time. So I don't think that happens today. I think it's way too early for them to expect that. But that's what I think we're set up for sometime as we move into the spring, is a $40 market, crude oil going to 60, and then all these bullish levers get turned. And then at a time when we have escalating weather problems in South America and crude oil is going up, you could see it's a 1-2 punch. It could create the next big surge in these ag markets. So I think, buyers, people who are on the buy side of these markets, they have to buy cash, the end users, they definitely are right to gain coverage, and they should continue to protect upside price risks as we move into the spring, so long as it looks like that's the timeline for these vaccines to really kick in and make people much more comfortable.
Yep. All right. So one other thing that I've been watching a little bit and paying some attention to since you talked about it one time, I don't know, maybe 2 months ago, and it was right around the time that there was some in the lumber market when the we were having some supply chain issues with COVID and getting stuff shipped around and getting stuff moved around and those kind of things. And then we had that derecho hit in Iowa, and the price of lumber just went through the roof, right? Well, ever since then, the price of lumber has just been, it's just been almost like, I use the word free fall here in some instances. So I guess, I'm looking at a chart now of lumber contracts that are out there now, and most of these are limit down. I mean, off 25 cent or 25, 32, 28 and a half, 11, 7. I mean, and it just seems like that's been a pretty consistent move week over week as you look at the lumber market, which is kind of important to me because I'm starting to remodel a house. So lumber is kind of a top of mind now. So I guess as you look at the lumber market, what do you see happening there?
Remember, the reason for the big run-up was that all these lumber mills shut down.
Right.
Of people getting infected, first of all. Second, because we had this crash in demand.
Right.
And then all of a sudden, everybody left the cities and bid up the real estate in the rural areas. And then the home builders said, oh my gosh, we better get building again because there's a huge demand for non-city property, but all the mills were closed.
Right. Right.
And then we had this wild run to 800 or whatever it was. I mean, all-time record high price. But a lumber mill, you start going, hey, Charlie, hey, John, just come on in, let's go. I mean, you got to call everybody, we got to set the schedule, and it's a production line. It takes 3 months to get that going. And so in that 3 months, we had this wild, the average lumber cost for a home went up $40,000 to $80,000 per home on that run up in lumber prices. So someone who thought that we're paying, let's say, $500,000 really had to pay $560 or $580 because of the lumber price. I mean, it got out of hand, and then we had the crash, this complete crash, when the lumber mills opened up, the lumber started kicking in, and all the buyers said, whoa, cancel these orders. We don't want $800 lumber anymore. And so that was that part of it. And now what's happening is, I think, if we're going to go to a vaccine world where everyone's comfortable, the cities are going to start to revive a little bit. It doesn't mean people are going to run in and, like I said, lick the handrails and all that stuff. But the panic buying of non-city real estate is going to calm down, which means all the building in those areas, you're going to have an oversupply. And now as the prices start to fall and there's that bubble kind of deflates a little bit, then all the home builders say, we have too much inventory. We have a very high price inventory. Stop the building. And then so lumber is it's going to struggle here, Casey, I think. We're moving into winter time, which is typically, obviously, a time where you don't build a lot of stuff. And so, lumber is not a market that's going to be very favorable. Now, as we move into the spring, if they get the inventories down and things get, normalize, there could be, an opportunity for lumber in the springtime. But for right now, we think downside price risks are pretty high. And if I was in the lumber mill business selling lumber, I'd sure get some cash lumber on the books for, out into the springtime and make sure I got some of these prices, because they still work for them, Casey. This is still not a bad price for them. But very quickly, they could be underwater again, and they don't want to be in a situation like they were in the spring where they just had no hope of making any money.
Yeah. I was hoping you'd tell me it's going to go back down to buy one get one free on the 2x4s, so I could remodel my house.
Well, lumber. If you look at a long-term chart of lumber, it's a fast, volatile market, and it overshoots big time in both directions, by the way. So it wouldn't surprise me. We may get that, buy one get one free, in the first or second quarter before it bottoms. Be on the lookout for. I'll let you know if that coupon. I get emailed that coupon.
That'd be great. Send it my way, because I'm gonna need it. All right, good deal. One other thing that we don't talk about much here, but it's some of the metals that we see happening, and gold has been. I don't know the best way to put it. I mean, gold is all over the board, and it reacts to a lot of different things. Gold's come down quite a bit from its high, where it hit about 2,000 earlier this year. Right now, gold is trading around $18.10 an ounce. We've seen some very high swings up and very high swings down, and it really just depends on what kind of information you hear out of the Fed. The ideas of inflation seem to be kind of the hedge. Gold's a hedge against inflation. So when it seems like there's not much of the inflation threat that people thought there would be, which I'm kind of I don't know, with all the money that we've been printed and those kind of things, and they're going to print more, and what that looks like, sooner or later the inflation bubble is going to have to pop. So I guess as you look at gold, what are your thoughts there? Mining stocks still seem to be, having a good return, but just gold itself seems to be struggling to maintain that 1,800 range. So.
As you know, I'm an ag specialist, and I'm a metal specialist. But from what I understand about gold, I think the big run-up last year was with the idea that so long as the virus was raging and that we were not going to be able to really open up our economy the way we wanted, that we have to keep printing money and we have to keep spending money fiscally to keep the economy going until such time that the vaccines kicked in or we found enough drugs to solve the problem, that sort of thing. And so it ran up on that. But now if these vaccines are going to come in and do the job they're said they're going to be able to do, which is vaccinate those that want to be and those that are at highest risk, and the economy opens up wide, do we need to print as much money Do we need to spend as much money fiscally as we did before if the economy can open up and we get this huge boom in economic activity? Probably not. Doesn't mean we won't print. Doesn't mean we won't fiscally spend, but it means we probably don't have to spend as much or print as much. And the gold market is always trying to look 6 months ahead. And it maybe is starting to say, oh, shoot, this is going to happen. So we were betting on, I don't know, another $7 trillion of fiscal spending. I'm just throwing out numbers. Another $7 trillion money printing. Maybe it's only going to be half of that. And if that's the case, then gold's really not the place to be if they're going to be pulling back on liquidity. You really want to be in those economically sensitive markets like cattle, like cotton, like crude oil, like copper, those kind of markets versus gold, which really the industrial demand for gold is minimal. It's really an investment metal where people hold it as a hedge against inflation and uncertainty, really. So I think that's why gold's been struggling, and it probably will continue to struggle so long as there's good news on the vaccine front, Casey.
Yeah. So one other thing that you track a lot, and you brought this to my attention, and shame on me for not paying attention more, but Titan International, they make ag tires, and you brought this up to me several times, and I've been watching it go, and lo and behold, you're right. The manufacturer of ag tires, when their stock price starts to go up, the commodity price tends to follow, and then vice versa. When it starts to go down, so does the price of commodities, and that is it's on a bit of a tear here. So, it seems like the long term aspects here, like you've talked about for the last couple of years, that when we get to this 2021, late 2020 range, we're going to start seeing this takeoff in commodity prices, and your prediction is coming true.
It is. I mean, we've had a major leg up in ag. The first major ag up in lag we've had in a long time. And that stock, I'm not here saying we should buy it or sell it or anything. It's just we've followed that stock. We've been following that stock since it came public in the mid-'90s. And it's probably the best predictor of the ag cycle we know of in terms of it tops at the top of the cycle, it bottoms at the bottom of the cycle, and it has big swings. I mean, that stock goes from $1 to 30 or 40, back to 1, back to 30 or 40, back to 1. It was at the lows in the spring, it was 1.25 or $1 or something, and now it's over 5. Right. So, yeah, I mean, that market has a great ability to read the ag cycle, and clearly, in our opinion, we've bottomed the ag cycle. It's turning up, and this is not a 6-month phenomenon. This is a multi-year, 5-10-year phenomenon. So once this cycle turns, I mean, this is not like, this is a major turn in the ag cycle. This is a major turn in the equipment cycle, major turn. I think that stock reacting the way that it is, Casey, is a very good corroborator, of what we've been talking about: the ag cycle turning, ag prices turning, fortunes for farmers turning. You see that stock verify that is another one of these signposts we look for to align that we're on the right track with what we're seeing. And that stock is definitely giving us serious signals that the ag cycle has turned up. And so, yeah, that was something we were looking to see, to verify if our prediction of an ag bull market cycle beginning in late 2020 was going to be true. And so far, it looks like we're on the right track. So,
well, good deal, man.
And of course, that's very good for you, Casey.
It's great for me. I dig it. I like things are plugging along great. Well, looks like we're going to have. I'm very interested to see what happens this year. We've talked about it here several times. Just my interest in how things are going to progress through the end of the year. We're starting to see a bit of a pickup. We're kind of in that post-harvest lull. I think most guys are going to be done right around Thanksgiving, and I kind of give it a plus or minus 5 days type of thing. But as we head into December, all producers are going to have a great opportunity to sit down with tax advisors and accountants and bankers and those kind of things to really start looking at what what 2020 looked like and where they're at. And there's some profitability out there this year, so there's going to be some year-end tax buying, and it's not going to be as rushed as it's been in the past. So I'm really looking forward to see how December ends up. I'm quite optimistic about how December is going to look, and going into the first of the year?
Yeah, I think the prospects look good. And, I mean, what usually happens at the beginning of the cycle is all of a sudden, very, very quickly, you get into a serious shortage of equipment, used equipment and new equipment, because, the capacity has been ratcheted down after 8 years of nothing. Then you get this huge demand surge, and then it takes time to fill it. So it's a good place. You're in a good, ag equipment, used equipment, new equipment is in a good place to be right now. And so, yeah, I think December could be a really interesting month, but a very good month that leads into a very good 2021, the way we see it. So.
Yep, absolutely. Well, good stuff, Shawn. If folks want to reach out to you and get more information about what Hackett Financial can do for them, what's the best way to do that?
Best thing to do is just go to our website at Hackett, Hackett, advisors.com. They can download sample reports, watch interviews that we've done with you and others to see if what we do might be of value to your listeners.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. This is where you can find the latest editions of the Moving Iron Podcast and the Moving Iron blogs as they come out. Check out my website, movingironllc.com, for the latest information about the Moving Iron Summit, January 20th through the 22nd at the Renaissance Hotel in downtown Nashville, Tennessee. Shawn will be there. He's going to give a great speech about what's going on in as far as he sees happening with some weather cycles that are coming up. And to be honest with you folks, the stuff he talks about, it's all been spot on. So definitely check him out. Google Shawn real quick and just see what you come up with, because he's got some great information out there. Global Ag Network is a great place to find other ag-related podcasts. And with that, I am Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out.
Moving higher in the 21st century.